Hello, Oracles. Well, Tesla is getting a reset. And I don't mean anything to do with their production, anything to do with their vehicles, anything to do with energy. What we're getting a reset with is expectations. We are now seeing expectations that are exceeding what Tesla is actually doing. Now we can discuss all day long about, expectations, and they're just not setting their expectations to the right levels when it comes to Wall Street analysts. But when we look back for the last 10 years, Tesla has consistently met or exceeded expectations. Tesla said, "This is what we are going to do." There were many disbelievers on Wall Street. They said, "There's no way you're going to do that." They underestimated them. Tesla continued to smash those expectations. So, sure, we can go and argue and say that the expectations weren't set right. Fine. But in looking at that, Tesla managed to exceed them every time. So eventually, Wall Street and many analysts caught up and said, you know what? They've been consistently meeting and exceeding expectations. We will now also raise the bar with our expectations. Unfortunately, that bar was raised right at the time Tesla started meeting some headwinds that they just could not overcome. Tesla was able to defeat headwinds like COVID, lockdowns, supply chain issues. All of these things, Tesla still continued to climb and exceed expectations. Now we are facing the biggest headwind that they could possibly be facing, and that is a declining economy. You just can't beat that. We talked about it before where, many people thought that Tesla was just this invincible giant and nothing can defeat it. Nothing was stronger than Tesla. Well, it turns out the macro environment, the Fed, the economy, they are all stronger than Tesla. There is no individual company that is stronger than that. And right now, Tesla is facing that. And because of the fact that the timing of expectations being raised and Tesla now facing these headwinds, coming together means that analysts are like, well, they're missing expectations. We are seeing the stock price pulling down for a plethora of reasons. This is one of those reasons. So this year in 2023, Tesla needs to reset the game. Tesla needs to reset what they are doing. We've already seen that happen over in China. We saw an average of about 10% price drops coming for all of their vehicles over there. They've got those price drops coming. That means that we now need to reset our expectations when it comes to vehicle margins. What are those vehicle margins going to be? We truly don't know. Tesla came out recently and said that they ended up dropping the prices because the cost of manufacturing also came down. Well, it was ironic that it came at the exact same time that we were seeing demand starting to pull down. We were seeing BYD still climbing, but Tesla was not. So was Tesla really just waiting for the first of the year to make these price drops happen? We don't know. This is what Tesla told us. So all we can go by is what they told us. And what Tesla is telling us is the cost of their manufacturing has come down. Therefore, they can come down on their prices. If that is the case, do margins hold steady then? Do we still have 25 to 30% margins coming out of China due to these price drops? What margins were they at before? If we were at this case, were their margins pushing 40% before this because their costs came down? Again, we are going to need to wait for Q4 earnings to actually make that determination and figure out what this truly is going on. But this is the reset that we're going to go through. This year, there's a lot of things that we have unknown right now. We know that Tesla is still striving to get as many vehicles produced and delivered as possible. We know that production run rate is pushing that 2.1 million vehicle annually rate. And that doesn't include any further ramps of their factories over the course of this year. So that means they have the potential of producing significantly more than 2.1 million vehicles. So now we wait and see how that plays out. Now we say, well, if Tesla is going to produce that many, are they going to deliver that many? According to Elon, that is the plan. They will reduce their vehicle prices as much as they need to, even if it takes them down to zero margin, just so that they can deliver every single vehicle that they produce. And again, this is what we just saw in China, but is that really zero margins? I highly doubt it, but we will find out for sure when we get to Q4 earnings. And of course, with these demand questions over in China, many people are saying Tesla really needs to come out with this $30,000 vehicle. We've had discussions before saying, well, maybe the Model 3 could be that $30,000 vehicle if they cut costs. Well, we've got Omar coming out looking at all of the price drops Tesla just did over in China. Omar's coming out. Tesla can produce a car that runs FSD for less than $33,000. Let that sink in. And our response is right now or in the future? This question is very important. Omar says right now. And Elon responding to this, people still don't get it. And people aren't getting that. They're coming out and saying we need to have a $30,000 vehicle. Now we have a $30,000 vehicle over in China. It's here. We didn't need a new platform. We didn't need a compact car. We didn't need any of that. We have the Model 3. It's already here. And that vehicle is already selling for $33,000. It exists and it is for sale. Now, I do think that we are going to be getting some significant price drops here in the US as well. We have been seeing inventory building up on this. And I tweeted out this morning saying current Tesla inventory near me in Connecticut. This includes the Boston, Rhode Island, and New York City areas. Last week, there was zero. When we finished the year off, 2022, there was nothing for the Model 3 or the Model Y in inventory whatsoever. Right now, there are 25 Model 3s and 92 Model Ys in these areas. So I'm going to monitor this on a weekly basis to see how this changes. But knowing that Tesla dropped the price $7,500 for the last 2 weeks of 2022 and almost instantly sold out of every single vehicle that they had in inventory tells me that we are seeing this inventory buildup happening because people want to see a price drop. Right now we're going into potential recessionary times. Now here in the US, we're seeing China prices getting dropped significantly. And so people in the US are going to be like, what about us? Where's our price drop? So I have a feeling we are going to be seeing this coming. If you guys were on the live stream last night with John and Mark, it was a great live stream. And just discussing, where that balance is for me in purchasing my vehicle. You guys who've been following for a while know there was many reasons I chose not to get mine. But if Tesla comes down on their prices significantly, let's say Tesla drops the Model Y down to $49,000. That would leave some room for anybody who wanted to add on the better wheels or some paint, whatever it is, to be able to stay under that $55,000 mark. Then we can also qualify for that EV tax credit. Right now, that is not a rebate. Right now, that is an actual credit. We file at the end of the year for our taxes for next year, and we will get that taken off of our income. So it's not really the same because especially with interest rates being as high as they are, we still need to end up paying the interest on that extra $7,500. But if Tesla drops the prices down to $49,000, that would end up being a $16,000 price cut. Now, don't forget, those prices were down at that level not so long ago. We had Roland Pritchard come out with this Tesla prices in China. And now the US prices, I want to see a chart for that because they're relatively the same. But taking a look at the fact that, Tesla has wanted to come down on prices. They want to make these vehicles more affordable. It's going to be very much like other tech, like phones, phone prices. While we may see now phone prices going up, they did come down at first, but they don't go up by that much. But the technology that you get for that price is significantly better. So the price of technology comes down. Kathy Wood has mentioned this many times, discussing about the fact that technology in itself is a deflationary product. This is what we are seeing. So taking a look at the charts here, we saw the prices going up during COVID. We have to remember that happened. And so now looking at where the prices are, they're just coming down slightly lower than they were previously. But you have to remember that the costs of manufacturing have also come down. Yes, some of the supplies and the costs of supplies had gone up for the last 2 years as well, but most of the reason that the prices ended up going up were because of demand. There was so much demand that Tesla needed to go up on the prices to quell some of that demand. Now we are in the opposite case. Now we can go back to where the prices were before with a better and more efficient product. We're now at economies of scale in almost 4 factories. We still have Austin and Berlin that are still continuing to grow and lower costs. Shanghai is already there. So their efficiency is top notch. And this is something that I'm going to be paying attention to on the Q4 earnings is, are they really that efficient? Where are the vehicle margins over in China? Because if that is where we are going to be getting that epic number from, then watch out, because if margins still come in at that 28, 29 to 30% level, despite all of these price cuts in Q4, That is going to be an eyes wide open moment for this year. Now, I'm not going to just get everybody excited about this. It's just something that I'm thinking about if this ends up happening. But we're seeing the prices coming down. That means that the prices in the US could come down very similar to what this chart looks like here. And so if we end up getting those prices coming down, but margins can stay high, as Pierre Farragut had mentioned previously, maybe we take a few point hit in our margins, but it's about getting the vehicles out onto the road. That is their number one priority this year. So if we have to reset our expectations and say, all right, margins are no longer going to be 30 to 35%, margins are now going to be 25 to 30% or 20 to 25%, but we are still going to be meeting those delivery targets. And maybe now those delivery targets aren't 50%. Maybe those delivery targets are 40%. We do not have any guidance yet coming out of Tesla. We will have to wait and get that from Q4 earnings, but they have been very consistent about 50% year over year growth. This is the first time we may see something different. We don't know. We're still waiting to see what's going to happen. But just seeing that the expectations for this year are going to get reset. And I think the better Tesla does of setting people's expectations as far as what growth is going to look like for the company, the better it's going to be for them to exceed those expectations. Now, we do have Investor Day coming up on March 1st. That is where they're going to be setting out their long-term game plan and showing us all where they're looking to go in the future. And I have a feeling Master Plan Part 3 might come out before that because I think that's kind of what ties into it. So whether we get it before it or after it, I don't know. Elon has basically given us the entire premise behind what Master Plan Part 3 is going to be, and that is just scaling to extreme size. In order to do that, you may have to take hits on your margins to be able to scale up even more. But then you also have to remember that even if they take a hit on margins, by putting out more vehicles, they're going to end up getting more dollars on the bottom line when it comes to profits. So yes, maybe the percent number isn't as high as it was, but we have to pay attention to what is the actual bottom line number. That is what goes into EPS. EPS is earnings per share. So what are their earnings? So even if they put out, 30% margins, but they only delivered 1.5 million vehicles in 2023, perhaps they would make more money by coming down to 25% margins and putting out 2 million vehicles. So those are the numbers that they are playing with. They know all the margins. So just, putting together rough numbers here, by putting out and delivering more vehicles at lower margins, they may actually have higher earnings at the end of the year. And so essentially that is win-win. And that's kind of what we're looking at, and looking at the fact that more vehicles on the road mean more people who are available to buy any software or FSD that goes along with the vehicles. And speaking of FSD, Elon came out and replied to Holmar's blog saying that looks like version 11.3 will be ready for wide release in about 2 weeks. Many major improvements. And so, of course, I put out my tweet here saying 2 weeks. If anybody knows this from Total Recall, just kind of the joke that Elon always says 2 weeks and it's never actually 2 weeks. So we shall see, because we were expecting version 11 to be coming out before Christmas. That did not happen. And so at this point, we're just waiting for, it actually to come out. And again, sometimes time frames aren't exactly where they're, Elon says they are. He tries to be aggressive, exciting. We'll get it when we get it, but we are going to be getting it soon. And so when it does come out, seeing the major improvements that come out with it, that will end up meaning more buyers available to be able to take FSD because they have put more vehicles out on the road. So now we've got more vehicles on the road, improvements in FSD, so more people may be apt and wanting to buy it because now it is wide release, so all of North America can get this. And then what's going to end up happening is, the price is high. It's $15,000. They're probably going to be going up on that price again, especially with version 11.3. So that goes up. Less people are apt to buy that lump sum amount. But when they start going to subscription-based, you start paying, let's say, $100 or $200 a month for it, people are more willing to pay something like that. And if it's a case where they can cancel any time and they can say, you know what, I want FSD for this month, but not next month, they can do that. But then people can get on there and then they can, a little bit at a time say, I'm going to pay $200 for this month to see what FSD is like. They drive it for the month and say, you know what, the improvements are good enough. I'm going to continue it next month. or maybe the improvements are not good enough. And then they cancel for the next month and wait for the next version to come out. And then they try it again. But at least that's going to be more continuous FSD revenue coming in because we have more vehicles on the road. And so this is where the expectations are really going to shift. And I had made a video about it previously about 2023 becoming the year where Tesla really shows that it's not just a car company. They're going to have energy. I think that's going to be a major push that we see this year. And then the FSD is going to be the next one. Because again, if margins are going to be lower to get vehicles on the road, we are going to be then expecting lower margins going forward. But then FSD is going to come out, and that is pure profit. That will all go to the bottom line. That is going to bump up margins even more afterwards because of what's going on right now. So this is almost going to be like a delayed margin and delayed profits in the future by Tesla taking a margin hit now. But we'll have those reset expectations. And because we're going to have those reset expectations, Tesla will then be in a prime position to do exactly what they did for the last decade and come out and have so many disbelievers out there saying Tesla's never going to do this, and then continually do it over and over and over again. And the last thing I wanted to share with you guys, if you didn't get to see Tesla Daily, Rob Maurer was mentioning how looks like all of the containers and all of the packages that we needed for IDRA are starting to come over for the Cybertruck into Austin. So this is very exciting. So we know we've been waiting on this, kind of anticipated it to be rolling in end of 2022. Here we are in the first week of 2023, and all of the equipment is starting to roll in there. So we will have this GigaPress up and running. I don't know. I think it takes a couple of months to get the whole entire thing set up. I believe that's the last I had heard about how long it takes is a month or two to get set up. But that means that they'll have it set up. They'll be able to do pre-production. They'll be able to do all the tests on it, which means that production and deliveries by July, first month of Q3, are still on the table. So we will see how the Cybertruck plays out as this year goes on. But I think this year is going to be a great reset for a lot of people and their mentalities when it comes to Tesla stock and the company itself. And I think going out of this, we're going to see those now lowered expectations due to what's going on in the economy, and Tesla will get into another run of exceeding expectations again. Let me know in the comments below, what do you guys think about the expectations coming up? I know we've had many discussions on here about expectations when it comes to it's just really Wall Street doesn't know how to set their expectations, and people don't know how to do that. But then we've got guys like Troy Tesla, Tesla Karov coming out and giving very solid, good numbers that are very accurate that analysts start going off of. So if we have these accurate numbers coming out, and now Troy Tesla is starting to have issues because he's still trying to figure out the delivery waves as well, now numbers aren't coming out as accurate. So now we're going to have a little more jumble when it comes to these numbers and less accuracy. So people will lower their expectations. Wall Street thought 418,000 deliveries were going to happen in Q4. We saw 405,000. So Tesla coming under that. They came under that in Q3. Now Wall Street will most likely start lowering their expectations below what they think, below what Tesla tells us. And again, we're going to go back into that cycle again. So you guys can let me know in the comments below what you think about that. This week, we are going to be having Alexandra on. She'll be on next Friday, Friday the 13th. And we're going to be discussing a lot of different things. We're going to be discussing credit ratings. We're going to be discussing Kathy Wood and ARK doing a lot of buying when it comes to Tesla. We're going to talk about Tesla financing. And we're also going to talk about what financing is going to end up doing to legacy auto during 2023 when all of these vehicles are taking a lot of hits when it comes to these interest rates going up. So I will keep you guys posted on that one, but she will be on next Friday. Thank you guys so much. Have a great one.